Look, we all know Amazon, right? That box with a familiar smile seems to be a permanent fixture on our doorsteps. But here's the thing, there's a huge difference between being a happy customer and being a smart owner. So the real question for us as investors is, should we actually own a piece of this company?
And the answer to that question, like with pretty much any investment, comes down to one simple thing: the price you pay. So that's what we're going to do in this breakdown. We are going to cut through all the noise and get to the bottom of one fundamental question. What is Amazon truly worth?
Okay, so here's our game plan. We're going to start by looking at how Amazon actually makes its money. Then we'll run the numbers to figure out its true value and do a real deep dive into the fundamentals. After that, we'll check out the risks and rewards, find the right price to buy in, and then the final verdict. Let's get into it.
All right, first things first. We have to understand Amazon's business machine, because trust me, it is so much more than just a place to buy stuff online.
Okay, this is the secret sauce right here. Amazon is this incredibly smart, diversified platform. You have to think of it like this: the super profitable parts of the business. I'm talking about AWS cloud services and their huge ad network. They're basically bankrolling the retail side of things. That's the key that's pushed their gross margins way up, over 50%.
And the scale, it's just mind-boggling. We're talking nearly $717 billion in revenue over the last year alone. That is just a massive, massive operation by any definition.
But here's where the story gets really interesting. If you look back over the last decade, revenue growth was just on fire, almost 21% a year. But in the last 3 years, it's cooled off to just under 12%. And what that tells you is that Amazon's maturing. It's shifting gears from an all-out sprint to more of a long-distance marathon.
Okay, so knowing that growth is slowing down, that leads to the big question. How in the world do we figure out what this company is actually worth? What's its real sticker price, totally separate from what the stock market is saying day to day? And boom, right here, this is the core problem we're wrestling with. Our analysis, using a discounted cash flow model, which is just a fancy way of estimating its value based on the future cash it'll generate, gives us an intrinsic value of about $155 a share. But look at the market. It's trading at $203. That's a huge gap we really need to dig into.
Now, I want to be super clear about our goal here. We're not just pulling numbers out of thin air. This whole analysis is built around one simple question. Can this stock give us at least a 9% return compounded annually for the next 16 years? That's our yardstick. That's our target.
Okay, so let's get into the deep dive. It's time to pop the hood and really see if this valuation holds up under scrutiny. So, first question in the deep dive. Does Amazon have what we call a durable competitive moat, an advantage that's tough to beat? Oh yeah, absolutely. It's got a fortress. Its logistics network, good luck trying to copy that. AWS customers, it's a huge pain for them to switch. The marketplace has these powerful network effects. More buyers bring more sellers and so on. And that Prime ecosystem, man, that just locks you in.
But, and this is a big but, there's a potential chink in the armor. Check this out. Net income for the last year was almost $78 billion. Huge, right? But the free cash flow, the actual cash the business has left over, was only $7.7 billion. So where did all that money go? Well, Amazon is a cash-burning machine, constantly reinvesting colossal amounts of money into building new data centers and warehouses. That's the reason for that big gap.
And this weighted SWOT analysis really puts it all into perspective. On one hand, you have these incredible strengths like its scale and AWS growth, which give it a really solid positive score. But you absolutely cannot ignore the negatives. That massive capital spending we just talked about is a big one, and then there's the constant threat of government regulation looming over them. Those are some serious weights.
Okay, so with all that in mind, let's explore what the future could hold. To do this right, we have to look at a few different potential futures for Amazon, from the best case all the way down to the worst case scenario. So we've run the numbers on 3 different possibilities. In our bear case, the pessimistic view where growth slows way down and profits get squeezed, we think the company's worth about $130 a share. Our base case, the most likely outcome, is that $155 number we talked about. And then there's the bull case, the super optimistic view, where strong growth continues, and that could push the value up to $210.
Now pay attention, because this might be the most important point of this entire analysis. The current market price at around $203 is already baked into that super optimistic bull case scenario. What that means is, to buy the stock today, You're betting that everything is going to go perfectly for Amazon. There is just very little margin for safety if things go even slightly wrong. So, that brings us back to our goal. If we're going to be disciplined investors and stick to that 9% return target, what price does it actually make sense to get in on Amazon stock? So, what is the right price? Well, it depends on what you're trying to achieve. If you'd be happy with a 5% return each year, then yeah, buying around today's price could make sense. But for us, to hit our target of 9% a year over the next 16 years, the math is crystal clear. The absolute most we should be paying is around $160 a share. And it's also interesting to see how your time horizon changes the numbers. Let's say you only wanted to hold for 5 years. Well, to get that same 9% return, you need to buy in at a much lower price, around $145. A longer-term perspective, like our 16-year window, gives you a little more breathing room, which is how we land back at that $160 target.
Okay, let's wrap this all up. What's the final verdict? You know, after running all the numbers, the conclusion is pretty straightforward. At its current price, if you already own it, it's probably a hold. But based on our goal of a 9% return, it is definitely not a buy right now.
And this brings us to maybe the most important lesson in all of investing. A truly great world-changing business is not a great investment at any price. Remember, price is what you pay, but value is what you get. And from our perspective, the price for Amazon right now seems to be way out ahead of its actual value.
So, everything we did here was built on a disciplined, value investing framework. It's all about the numbers and having a clear goal. And now, I want to turn it over to you. What company should we put under the microscope next? Drop your suggestions in the comments below. We'd love to hear from you.